This is Kyle with Fundamentals of Finance, and today I'm going to be breaking down the massive flurry of positive news we've had in China recently and what it can mean for the Chinese stock market going forward. But just to make sure we're all on the same page, let's start with a brief overview of all the craziness that's happened over the past couple years and led us to where we are today. For some perspective, the Chinese stock market fell more than 62% from its high in February 2021 to its low in October 2022. That's even more than the US stock market fell from its peak in 2007 to its bottom in 2009. So yeah, it was a lot. For nearly 2 years, it just felt like nothing was going right for China. From a whirlwind of domestic regulations to constant US-China tensions to a property market crash to their extremely strict zero COVID policy that would lock down cities of millions of people for like 5 COVID cases, they just couldn't catch a break. It was just constant negativity, and the market kept going lower and lower and lower and lower to the point where people started questioning whether China was even investable anymore. My, how the tables have turned. The market bottomed out on October 31st, that's Halloween for a lot of people, after President Xi filled the government with loyalists at the Party Congress. And investors feared it meant the end of business-friendly policies and the continuation of the zero COVID policies. But then protests began to erupt around China throughout November. People were just fed up with the daily COVID testing requirements and all the other harsh restrictions being placed on them, especially after watching the World Cup and seeing how no one was even wearing masks. It felt like a different world to them. Now, my personal belief is that there is nothing the Chinese Communist Party cares more about than maintaining stability. And widespread protests are not exactly helpful for that. After a few weeks, they began dismantling their zero COVID policy. They still have more restrictions than most countries, but it's nothing like it was a few weeks ago. First of all, there's no more daily mass testing. In fact, it's hard to even find a place to get tested nowadays, even if you want to. Quarantine rules have been relaxed, travel restrictions have been relaxed, and the state-sponsored media has switched from daily stories about the horrors of COVID in the US to telling people Omicron is really not that big of a deal. It's been a massive shift in a very short period of time. Now, of course, there are definitely risks, which I'll get to in the end, but overall, it's a major positive sign for the country over the next year or two. The next major change has been with respect to domestic regulation. That was the primary cause of the initial market drop in 2021, and the crackdown on the property sector has hurt a lot in 2022 as well. But in December 22, they completely changed their tune. They came out and emphasized their goal of restoring confidence, and without getting too far in the weeds, made a bunch of extremely pro-growth comments that were totally out of step with the narrative of the past couple years. They even reversed course on private education, which is an industry they pretty much destroyed overnight less than 2 years ago. Here too, there are definitely some reasons to be cautious, which I'll get to at the end, but these are definitely positive signs. Even US-China tensions have had some bright spots lately. The US-listed Chinese companies that were going to be delisted for not complying with audit requirements opened up their books and all passed. Thus, the 3-year delisting window has been reset, and as long as they keep complying, I see no reason why they ever have to be delisted. The USA also just removed Chinese drug manufacturer WuXi Biologics from the unverified list, which is a list that restricts companies from receiving certain US imports. I'm not even remotely ready to say US-China tensions are ending, but it's nice to have some positives for once. And one last positive change has to do with Taiwan, which is the source of perhaps the biggest risk of investing in China. The small chance that they'd invade Taiwan and end up in a war with the US just got smaller since the pro-China KMT party in Taiwan won a landslide victory in the recent election. The thought process goes like this. If Taiwan started pushing harder for independence, that could force China's hand to intervene and try to unite the countries more forcefully. And that scenario just got less likely with the pro-China government in place. So to sum it up, zero COVID restrictions were eased quite a bit. There's been a major pivot in Chinese domestic policy from restrictive to supportive, and we've had some slight easing of the tensions around the US-China relationship and Taiwan. Taken together, this could lead to a massive reversal in Chinese equities. Actually, it looks like one might already be happening, but there are some reasons for caution that I think are important to mention. On zero COVID, I think odds are high that we're directionally headed towards loosening up, which is a very good thing. But I don't think the progress will be linear. Unlike the rest of the world, Chinese people have very little natural immunity to COVID because it really hasn't been spreading there. They also only have about 40% of people over 80 with a booster shot, which is more important there than it is here because their vaccines are less effective. Yes, Omicron is not nearly as risky as prior variants. They're still going through a massive COVID outbreak right now, and it wouldn't surprise me at all if that disrupted the economy for a little while longer. On US-China tensions, it seems pretty unlikely that China will be the aggressor since they're trying to restore confidence among foreign investors. But they really haven't been the aggressor much at all up to this point. It's mostly been US politicians who've been competing to show who can be toughest on China. And I don't see any reason why that would change in the near term. So a flare up there is certainly a risk. And on a related note, Taiwanese voters may not want to declare independence, but US politicians might still want to go for another official visit to Taiwan, which is another way that issues could flare up again. So are Chinese stocks the best investment opportunity for 2023? I think there's a good chance that they are, but investing in China right now is a high risk, high reward proposition. There's a good chance it could be the best returning major stock market in 2023. But guess what? It could also be one of the worst, so it makes sense to proceed with caution, especially right now when we don't know yet how they'll react to the major COVID outbreak going on over there. Okay, so the way that I like to incorporate high risk, high reward investments like these into my portfolio is to A, make sure I'm willing to hold it for the long term, like years. And B, I start small, like much smaller than the amount I'd be willing to invest. I mean, you can't reliably get the timing right with these, so my thought process is, well, hey, if my timing is perfect and I only have a small amount invested, I'm still happy with that. My timing was perfect. If not, which is more common, then I'll keep adding to the position on the way down as long as nothing has changed about my long-term thesis, up until I hit the point where I've invested the most I'm willing to invest. That's how I plan to invest in China. I started a position sometime in the middle of 2022, maybe May-ish. If the market sells off again on short-term fears like a new COVID lockdown or something, I'll happily add more. Like any investment, there's risk, there's uncertainty, and I definitely don't want to put all of my eggs into one basket. Okay, so given that I think the positives greatly outweigh the negatives though, and China could be recovering while the rest of the world is going into a recession, I find Chinese equities to be one of the most attractive multi-year investment opportunities heading into 2023. By the way, I started this channel to help Americans learn how the professionals invest. If you want to take your investing knowledge to the next level, check out the link below called the 9 Habits You Need to Be a Successful Investor. The link is in the description. Thank you so much for watching, and I will see you in the next video.